everyone. Welcome to the Property Wealth Podcast, where we dive into the world of real estate investing.
That's right, Sarah. Today, we're exploring something that can really enhance your investing journey. The top real estate YouTube channels for investors.
Yeah, it's amazing how much valuable information is out there, just a click away. These channels can help you learn from others, experiences, get tips and tricks, and maybe even inspire your next investment move.
Absolutely. And for those of us over 40, it's about finding the right resources that resonate with our experiences and goals.
Exactly. We'll cover which channels are worth your time, what you can learn from them, and how they can help you build long-term wealth in real estate.
And we'll also share some personal insights on what we found useful along the way.
Plus, we'll touch on common pitfalls to watch out for when you're diving into these resources so you can skip some of the learning curve.
Sounds like a plan. So let's jump right into it and start exploring those channels.
So, Mike, why does this topic of finding good real estate YouTube channels really matter right now, especially for folks over 40?
Well, Sarah, it's a pretty critical time for a lot of people. As we age, our retirement timelines become more pressing, right? Many folks are starting to think, am I on track to build the wealth I need for a comfortable retirement?
Exactly. And with all the changes happening in the market, it can feel a bit overwhelming.
Right, and that's where these channels can really help. They provide insights into current economic trends, strategies for navigating shifts, and ways to protect against inflation. I mean, inflation is a big concern these days.
Absolutely. It's like the cost of living keeps creeping up, and if your investments aren't keeping pace, it can be a real worry.
Exactly. And I think it's also important to note that many people over 40 are not just thinking about their own financial security, but also about passing on wealth to their families.
Yes. I've heard stories of investors who have turned their real estate investments into a legacy for their children.
Right, and that's a powerful motivator. For example, I know someone who bought a duplex when they were in their late 40s. They worked hard to renovate it and managed to increase the rental income significantly. Now, they're not only set for retirement, but they're also creating a nest egg for their kids.
That's a great example. The idea that you can build something that lasts,
Definitely. And I think it's about more than just numbers. There's an emotional side to financial security, too. When you know you have a solid investment, it can really ease the stress of planning for retirement.
For sure. It gives you that peace of mind, knowing you've got something stable to rely on.
Exactly. And with the volatility in the stock market lately, many people are looking to diversify their portfolios. Real estate can offer more stability, which is especially appealing as we get closer to retirement.
That's a good point. So for someone in their 40s or 50s looking to invest now, it's not just about making quick cash, it's about long-term strategies, right?
Yes, and that's where those YouTube channels come in handy. They can provide practical advice, real-life examples, and even step-by-step guides.
And there's something truly relatable about seeing someone else's journey, right? You can learn from their mistakes and successes without having to go through it all yourself.
Definitely. I remember one channel I watched where the host shared his experience of buying a property that seemed like a great deal, but it ended up needing way more repairs than he anticipated.
Ooh, those stories are gold. They remind us that not every investment is going to be a home run.
Exactly. And that transparency is so important. It helps set realistic expectations.
Yeah, and for those of us who are maybe a bit more risk-averse, it's reassuring to hear about the ups and downs of real estate investing.
Right, and it's also about building a community. Many channels have active comment sections where viewers share their own experiences and advice. It's like having a support network at your fingertips.
And that's especially valuable for those who might feel isolated in their investing journey.
Absolutely. I think about a woman I know who started investing in her late 50s. She found a great community online through YouTube, and it really helped her gain the confidence to make her first investment.
That's a perfect example. It's amazing how much we can learn from each other, especially when it comes to something as significant as real estate.
Right, and for people over 40, it's often about more than just financial gain. It's about creating a sense of security, stability, and legacy for their families.
Yes, and a lot of these channels focus on the bigger picture. They discuss how real estate can be a vehicle for not just personal wealth, but also community improvement and sustainability.
Exactly. Investing in real estate can lead to revitalizing neighborhoods, providing affordable housing, and really making a difference in people's lives.
So it's not just a financial decision, it's a lifestyle choice as well.
Definitely. And as we navigate these changing economic times, having access to quality information becomes even more crucial.
So what should someone be looking for in these YouTube channels?
Well, they should focus on channels that offer practical advice, real-life examples, and a community feel. Look for hosts who are transparent about their successes and failures, and who encourage questions and discussions.
And I think it's important to find channels that align with your personal values and investment goals, don't you think?
Absolutely. It's all about finding what resonates with you. And as we move into the next segment, we can dive deeper into specific strategies that can help listeners take action on what they've learned.
Sounds like a plan. Let's get into those core strategies.
So when it comes to evaluating real estate deals, there are a few key rules of thumb that can really guide you.
Right, like the 1% rule, which is super popular among investors. Can you break that down for us?
Sure. The 1% rule suggests that your monthly rent should be at least 1% of the purchase price of the property. For example, if you buy a property for $200,000, you'd want to aim for about $2,000 in monthly rent.
That sounds straightforward, but what if the rent is lower than that?
Well, then you might need to reconsider. It could signal that the property won't generate enough cash flow to cover your expenses, You'd want to dig deeper into the numbers to see if it still makes sense.
Got it. And what about the 50% rule?
The 50% rule is another great one. It's a quick way to estimate your operating expenses. Basically, you assume that about 50% of your rental income will go towards expenses like maintenance, property management, and taxes.
So, using our $2,000 rent example, you'd estimate around $1,000 for expenses?
Exactly. That leaves you with a potential cash flow of $1,000 per month before mortgage payments. It's a simple way to gauge if a property is worth pursuing.
That's super helpful. Are there other metrics investors should consider?
Definitely. One that's often discussed is the cap rate or capitalization rate. It gives you an idea of the potential return on an investment. To calculate it, you take the net operating income and divide it by the property's purchase price.
So, if your net operating income is $20,000 per year, and you bought the property for $200,000, you'd have a cap rate of 10%?
Right. A 10% cap rate is generally considered a good return, but it really depends on the market. Higher cap rates often indicate higher risk, so it's all about balancing that.
That makes sense. I imagine location plays a big role too, right?
Absolutely. The property's location can significantly affect both rent and expenses. Look for markets with strong job growth and good schools. Those are usually signs of a healthy rental market.
And what about the types of properties? Should investors focus on single-family homes, multifamily units, or something else?
It really depends on your investing strategy. Single-family homes can be easier to manage, but multifamily units often yield better cash flow, If you have a 3-unit property, even if one tenant moves out, you still have income from the other two.
Right, so diversification can help mitigate risk.
Exactly. And don't forget about the benefits of investing in commercial properties, too. They can offer long leases and less turnover compared to residential units.
That's a good point. But I imagine financing for commercial properties can be a bit different.
It is. Typically, commercial financing can require a larger down payment, and the terms can be more complex. But if you're willing to put in the work, the returns can be substantial.
Speaking of financing, what are some common options for investors just starting out?
Well, traditional mortgages are a common choice, especially if it's your first investment. You can also look into FHA loans, which allow for lower down payments.
And what about private money or hard money loans?
Those can be useful, especially for fix and flip projects. They often come with higher interest rates, but if you need quick cash to close on a deal, they can be a good fit.
So it's all about weighing the pros and cons.
Exactly. And don't forget about creative financing options like seller financing. Sometimes sellers are open to terms that can benefit both parties.
That's a great strategy. But how do you evaluate a deal once you've found a property?
You'll want to create a deal evaluation checklist. Start by looking at the purchase price, the potential rent, and the estimated expenses. Then, Calculate your cash flow and cap rate.
So it's all about those numbers, right?
Yes! Also, consider things like the neighborhood's growth potential and any upcoming developments that could affect property values. And don't overlook the condition of the property itself. That can save you a lot of headaches down the line.
It sounds like there's a lot to consider before jumping in.
For sure. And keeping a checklist helps make the process more systematic. You might want to include items like property condition, neighborhood statistics, and even your financing options.
That sounds really helpful.
And remember, no deal is perfect. There will always be trade-offs, but having a solid foundation of information can help you make a better decision.
Yeah, it's about being informed and making choices that align with your goals.
Exactly. And as you gain more experience, you'll develop your intuition for what works in your specific market.
So let's transition a bit. What are some common pitfalls investors should watch out for?
Well, one major pitfall is overestimating rental income. Many new investors project unrealistic rents, thinking they can charge more than the market supports.
That could lead to cash flow issues, for sure.
Absolutely. And then there's the danger of not doing enough due diligence. Skipping inspections or ignoring local market trends can really come back to bite you.
Right, it's all about being thorough and not getting caught up in the excitement of a potential deal.
Exactly. You want to approach each opportunity with a clear mind and a good strategy in place.
That's great advice, Mike. Let's dive deeper into those pitfalls next.
You know, Sarah, one of the biggest pitfalls I see, especially with newer investors, is over-leveraging.
Oh, absolutely. It can be so tempting, right? You get excited, and then you want to go all in.
Exactly. I had a client not too long ago who bought a couple of properties using 100% financing. They were convinced they'd make a killing in the market.
What happened?
Well, the market shifted slightly, and they found themselves in a tight spot. The rental income wasn't covering the mortgage payments, and they were stretched thin.
That must have been stressful for them.
It really was. They ended up having to sell one of the properties at a loss just to stay afloat. It's a tough lesson, but it taught them to always consider their cash flow and not just the potential appreciation.
Yeah, cash flow is key. It's not just about buying a property. It's about being able to maintain it and pay the bills.
Right, and speaking of tenants, that's another area where I see a lot of investors stumble.
Oh, definitely. Bad tenants can really wreck your investment.
I had another investor friend who didn't screen his tenants properly. He was in a rush to fill the vacancy.
I can see how that might happen, especially if you're anxious about cash flow.
Exactly. He ended up with a tenant who was consistently late on rent. And, they left the place in terrible condition when they moved out.
That's just a nightmare.
It really is. He learned the hard way that a thorough screening process is essential. It's worth taking the time to check references, income, and even past rental history.
For sure. And I think sometimes people underestimate the importance of a good lease agreement, too.
Absolutely. It's like your safety net, right? If something goes wrong, you want to have that solid agreement in place.
And what about those hidden costs? That's another thing that can catch new investors off guard.
Oh, definitely. I once had a client who bought a property thinking it was all about the purchase price. They didn't factor in things like property taxes, insurance, and maintenance.
Those can add up quickly.
Exactly. He ended up spending way more than he anticipated just to keep the property in good condition.
And that's where planning ahead becomes crucial, right?
Yes. A good rule of thumb is to budget at least 1% of the property value annually for maintenance.
That's a solid tip. And I guess timing the market is another common mistake.
Oh, for sure. I mean, trying to predict market highs and lows is like trying to catch lightning in a bottle.
It's so unpredictable.
I had a client who waited too long to purchase because he was convinced the market would drop.
And did it drop?
No, it kept rising. He lost out on a great opportunity. The lesson here is to focus on your long-term strategy rather than trying to time the market perfectly.
That makes a lot of sense. It's about being consistent in your approach, right?
Exactly. And being patient. Real estate is a long game.
And if you're in it for the long haul, market fluctuations can be less daunting.
Exactly. And, one more thing I think we should touch on is the importance of having a solid team around you.
Oh, for sure. A good team can really make or break your investment experience.
I've seen investors try to do everything themselves, from managing properties to handling repairs.
That sounds overwhelming.
It is, and it can lead to mistakes. I had a friend who tried to save money by handling a renovation himself.
How did that turn out?
Let's just say, he ended up spending more in the long run fixing his own mistakes than if he had hired a professional from the start.
Wow, that's a tough lesson.
It is. It's crucial to know when to delegate and trust the experts.
Absolutely. So, what can our listeners do to avoid these pitfalls?
Well, first, do your due diligence. Take the time to understand the market, your finances, and the properties you're interested in.
And don't rush into anything, right?
Exactly. Always consider your cash flow and ensure you have a solid financial plan in place.
And screening tenants thoroughly.
Yes, that's a must. Have a good lease agreement in place to protect yourself.
And budget for those hidden costs.
Right, and remember, real estate is a long-term investment. Focus on your overall strategy and be patient.
Great advice, Mike. I think these lessons will really help our listeners navigate their real estate journeys.
I hope so. And don't hesitate to reach out for advice or support if you're feeling overwhelmed.
That's a great point. Having a mentor or advisor can make all the difference.
Exactly. Surrounding yourself with the right people can help you avoid many of these common pitfalls.
And, of course, if you do encounter a setback, view it as a learning experience.
Absolutely. Every mistake is an opportunity to learn and grow.
Well, that's a great note to end on. What's next for our listeners?
But once you've taken these lessons to heart, the next step is to start researching potential properties, connect with local experts, and begin to formulate your investment strategy.
Sounds like a solid plan. Let's keep the momentum going.
Definitely. All right, so now that we've shared some of our favorite YouTube channels for real estate investors, let's dive into some immediate steps you can take today to really kickstart your journey.
Absolutely. It's all about taking that first step, right? So what do you think is the best way for someone to get started?
Well, the first thing is to get familiar with the tools out there. I mean, you can start by checking out apps like Zillow or Realtor.com to browse local listings. It's such a user-friendly way to understand your market.
Right, and both of those platforms offer tons of information, like property history and neighborhood trends. Super helpful when you're trying to get a feel for what's out there.
Exactly. And if you're serious about analyzing deals, I'd recommend checking out tools like the BiggerPockets Calculator or DealCheck. They can help you run the numbers and determine if a property is worth your investment.
Oh, I love the BiggerPockets community. Their forums are filled with real-life experiences and advice. It's like having a support system right at your fingertips.
Definitely. And don't forget about Rentometer. It's a great tool for quickly assessing rental prices in a specific area. Knowing what you can charge for rent is crucial.
For sure. And if someone's looking to get more personal with their research, accessing your local MLS can be a game changer. It gives you a more comprehensive view of the market compared to just browsing on public sites.
Right. Plus, it can help you find pocket listings that aren't even on the market yet. You might stumble upon some hidden gems that way.
That's so true. And what about some books or podcasts that could help our listeners? I feel like those can be such valuable resources.
I couldn't agree more. For books, the book on rental property investing by Brandon Turner is a great start. It's packed with practical advice and real-life examples.
I've heard great things about that one. And for podcasts, I'd recommend BiggerPockets Podcast. They interview successful investors and share their journeys, which can be really inspiring.
Yeah, and also the Real Estate Guys podcast. They cover a wide range of topics, from market trends to investment strategies. Perfect for anyone looking to broaden their knowledge.
And what about habits? What small steps can people take in their daily routine to keep moving forward?
Great question. One habit I recommend is analyzing at least one deal per week. Just pick a property that interests you and run the numbers. It'll help you get comfortable with evaluating investments.
That sounds doable. And joining a local meetup group can be a fantastic way to connect with other investors. Sharing experiences and insights can really accelerate your learning.
Absolutely. Plus, it's a great way to build your network. You never know who might have a lead on a great deal or could partner with you.
And let's not forget about setting some clear goals. Whether it's saving for a down payment or aiming to purchase your first rental property within a year, having those concrete targets can really keep you motivated.
Right. And don't be afraid to start small. Even if you can only invest in a single-family home or a small duplex, it's still a step in the right direction.
Exactly. The important thing is to just start where you are. You don't have to wait for the perfect moment or the perfect deal.
And remember, investing in real estate is a marathon, not a sprint. Be patient with yourself and celebrate those small wins along the way.
Yes, each step you take gets you closer to your goals. So with these tools in your pocket, you're ready to move forward. Let's recap what we've covered today.
So as we wrap up, let's quickly recap some of the key takeaways from our discussion on top real estate YouTube channels for investors.
Absolutely. First off, finding channels that resonate with you personally is super important, right? It makes the learning process so much more enjoyable.
Yeah, and also looking for channels that offer practical, actionable advice is crucial. You want to be able to take what you learn and apply it directly to your investing strategy.
Right. And don't forget about the value of community. Engaging with the comments section or even joining live streams can really enhance your learning experience.
Exactly. Plus, many of these channels provide insights from seasoned investors, which can help you avoid costly mistakes and build confidence in your own decisions.
And, of course, consistency is key. Make it a habit to watch these channels regularly, so you stay updated on market trends and new strategies.
All of this really ties back to the bigger picture of building wealth through real estate. It's not just about making a quick buck, but creating lasting financial stability for you and your family.
Yes, it's a journey. And with the right knowledge and mindset, you can absolutely achieve your goals.
So, if you enjoyed today's episode, we'd love for you to like, subscribe, and, share your biggest takeaway or any questions in the comments. And if you know someone over 40 who's looking to invest in property, send this their way.
Definitely. And just a little teaser for what's coming next. We'll be diving into house flipping in a high-interest environment. That should be really interesting.
Yeah, it's such an important topic right now, so make sure to tune in for that.
Thanks for joining us today.
Take care, everyone.
Bye for now.